All right.
All right, everybody. Thank you for showing up. This is Nicholas Lau, Ambassador 10 with Epic Trading International. Today, we're going to do something extra special for you today. We are going to have a rapid fire Q&A session with our Epic Educator and Ambassador 20, Aaron Crosbie. So what I did was I had sent out a link yesterday where you can submit your questions. I'll go ahead and drop that link here again. That way you guys can submit your questions and it'll make it a little bit easier. Sarah will also be looking for questions inside the chat box, but if you can use that form that I just used, that'll make it a lot easier. That way I know where the questions are coming from as well. So before we get started, just wanted to say that when I got started with this business, Aaron was one of the first people to reach out to me, aside from Ali and Thomas, and really take me under his wing, get on a couple of calls, show me the basics and everything. And it was his motivation that really let me, because he is already a successful Forex trader. He did not have to move up the ranks. He actually, he probably makes more money, a lot more money trading than he does on the business side.
Oh, a lot more. Yeah.
But it's the leadership and the ability to lead other people that makes us go for these ranks. It's not always about the money, because this is one of the only business models out there that you could actually make more money with the skill than the compensation plan, which is really, really amazing. So what I'm going to do is turn it over to Aaron, drop some fire in the chat. I want Aaron to tell us a little bit about his story, how he fell into the Forex world. And then from there, I'll get the question set up while he's telling the story. All right, Aaron.
Awesome. Guys, thank you. Thank you for joining us today. It's a lovely day. And, guys, I'm just really happy right now. I'll tell you why. Because one, it's coming up to Christmas in a few days. And it's one of my favorite times of the year. All right. But it's actually my birthday in 4 hours. So I'm feeling good. I'm feeling happy, guys. I'm feeling very happy. I'm feeling very blessed right now. And it's definitely feeling like one of my happiest and best birthdays on record, guys, because I'm just so grateful right now with what we've achieved this year as a family. And what I can say is I've never felt this happy in my life to be surrounded by people like you, a team like you guys, to have Christmas with you guys and what we've achieved so far this year feels way more enriching than anything I've accomplished yet in my life. So I'm just really happy, guys, to be sharing Christmas with you. And yeah, thank you. But yeah, like Nicholas was saying, so today the subject of this is Forex Q&A. Now, I do understand that you guys are definitely aspiring Forex traders, and some of you are already profitable, I'm sure, but some of you, have just kind of got into trading as of this year, and you're kind of fighting for profitability, because that's what it's like in your first year, right? You're fighting towards that profitable target. So I want to be here for you today. I want to be able to serve you guys. Any questions that you may have, I want to be able to answer those for you. And hopefully, that could be the difference between, getting to that next step for you. So yeah, I'm initially, guys, just going to go into a little bit of my journey, because Nicholas is really keen for me to make sure that you guys know where I'm coming from. So I'm happy to do that. So guys, I'll be honest with you, I've always been the kind of person that since a young age, I've had to go out there and figure out where I'm getting my dollar from, right? I was brought up in a middle-class family, and I was brought up with my mom and stepdad, and my dad is a pretty wealthy guy, but he was kind of separated from the family that I kind of grew up with. But because I used to see my dad enough, I could see what it looked like to be very successful. Because my dad would roll up on the pick me up on the weekends sometimes, and he'll pick me up in these beautiful Porsches and all these really lovely cars. And from a young age, I could see what success looked like, and for me that was exciting to know that I like those cars, and I like nice things. So I kind of grew up around success, but it was also far enough away from me to think, okay, that's something that I can kind of achieve one day. But kind of growing up as a young man, well, actually, it would be kind of like a teenager at this point. I was about 13 years old. I remember this quite vividly. I was at my dad's house that weekend, and I said to my dad, I said, "Dad, I need £50." And he said, "Why are you asking me for?" And I said, "Well, you've got the money. I want £50. So give it to me." And he said, "Look, if it's money you want, then you need to find out a way to get money." I said, well, I don't know how to make money. I'm just a kid, right? And he said, well, you need to go speak with your Uncle Michael. I said, okay, fine. I'll go speak with Uncle Michael. And I had a conversation with Michael, and my Uncle Michael's really successful. So he's the kind of guy where he's got like 70 to 80 properties the last time I checked, all across the country. So he's one of these kind of landlords, right, that rents out his properties, etc. And but his hobby is he's all about the kind of market stalls, right? So on the weekends, on a Saturday, he'll load up a market stall at Chelsea Football Club or Arsenal Football Club or West Ham, and he'll basically sell merchandise outside of those football clubs. That's what he grew up doing, and that's what he does now as a hobby alongside his property work. So I started working with him from the age of 13. And what was really cool about that is it was really nice to be able to go work with him for a day, you know, with the football fans, because I grew up playing football and watching football, so I love that kind of stuff. But being able to then come back home with £50 after a day's work, so I was like, oh, this feels good. I've got my own money now. Like, I don't need anyone, right? In my naivety, I was like, oh, I don't need anyone. Like, you know, I don't need my mum or my dad anymore. I've just got £50, right? I can keep doing this over and over again, right? So I got the £50, and it was really cool. I bought some PlayStation games and everything I wanted. But what that did, and I have to thank him for this, because I know a lot of dads out there and mums out there will probably give their children, you know, as much money as they need within reason. But my parents from a young age were like, look, if you want it, you're going to have to figure out how to get it. Like, we've got money, but we want you to figure it out, son, right? Because we need to raise you the right way. And I definitely appreciate that years later. But so anyway, that money was really great, and I just kept going back every weekend, working some more, because I always wanted a new PlayStation game. So that for me was what was my drive back then. And growing up from there, I went to work in sales, and, you know, I was, you know, again, I was like 15, 16 at this point. So, you know, there weren't many things I was qualified for, but what I could do is I went to my stepdad and I said, look, I need a job because I need more money, right? I don't want to work with Uncle Michael anymore. I want something more. I want more money. Because the thing, right, this human nature thing, we always want more, right? We can never be satisfied with the current money that we have. We always want a bit more. So I wanted more from the age of 15. So at that point there, I went to work in telesales. And this is the kind of thing where, you know, after school, during the week, I would jump on the train for an hour, go to do a telesales job for 3 hours, where I'm just smashing phones for 3 hours, smashing through phones, okay, booking appointments, etc. And then I'd get the train back for another hour and go home, and then it'd be like 10 o'clock, and then I'll have to get ready for school the next morning. So I started doing that. And again, that was good because it instilled in me more work ethic. It taught me that, you know, if you want to make more money, you're going to have to make some sacrifices. So my sacrifice then was I couldn't, you know, go out and hang out with friends after school, or, you know, kick footballs anymore, because 3 days out of the 5 in the week, and the weekend, by the way, I would have to go on the train and earn my next buck. And I was cool with that because I was like, all right, you know, more PlayStation games, you know, more PlayStations and stuff. And that's what I was into back then. So when I first got into trading, let me just fast forward to that a little bit. So fast forwarding now, kind of from 15 to 18, 19 years old, this is when I went to university. And at this point here, guys, I mean, this is like nearly 10 years ago for me now. At this point here, it was when the social networking scene was first really exposed to trading in a big way. So you can look this up. There's a guy called Joshante Amaya from London, and he was in the papers. I saw this guy in the papers. I thought, this is interesting. It said the youngest CEO in the UK in the papers. And I thought, wow, that's interesting. He's like, I think he was like 18. He was my age at the time. He's like 18 years old. And he said he was the youngest CEO also in Canary Wharf, which is the kind of financial district of the city of London. I thought, oh, okay, all right. And I looked in, I said, he's a trader. I said, I wanted to be a trader because one of my aspirations after I finished university, because I was going to do the whole course, right, is I wanted to consider maybe if I wanted to be a stockbroker or something like that. And I knew that stockbroking and trading, they have kind of some crossovers. So I thought, okay, maybe that's something I could do. So I looked into it a bit. And I began speaking to people. And the first thing I did, how I got into Forex, was I actually signed up for Joshante's Signal group. Okay, I signed up for his Signal group. interesting. I would go, through the signals and put the trades on and get used to putting trades on, a bit like, how you all would have started your journey. And then, some of them would win, and enough of them would win to the point where it was definitely profitable what I was doing. I thought, wow, okay. So at this point, it may make sense that, the kind of the part-time job that I was doing at the time whilst going for university, I was like, maybe I could replace this. Maybe I could replace this income, right, with trading. And it was funny actually, because it got to a point where Josh Ante was basically kind of giving these signals out to our group. But he said, look, guys, if you wanted to maybe be an affiliate of mine and therefore, run your own kind of signals group with me heading it up, and we can split profits, we can do that. And I said, okay, me being a kind of businessman and a little bit on enterprising, I said, this could work. Let me see if I have any friends that are interested. And that's what I did. I showed my friends my results from the signals. And I was quite surprised that there were many of them that actually were really interested. And before I knew it, the group just got so big. I was making like £5,000-6,000 a week at one point, just within a few weeks of doing it. And I was like, wow, there's like, not only can I make money from the signals, but being an affiliate, I'm making quite a bit of money. And, people like Nicholas Lau on this call, know all about affiliate marketing, how powerful that was. So I was basically an affiliate, and I didn't even know it yet. I didn't even know I was an affiliate marketer at that point. I was just doing what he said I was allowed to do and making thousands of pounds a week just off the bat like that. And it just kind of gave me a lot of inspiration, really. What it did for me is it gave me confidence that actually, I don't think I want to go to university anymore. I was like, I don't think I thought so. I never really wanted to go to university. I kind of just did it because my friends were all going to university. But the reality is, I was staring in the face a 40, 50,000 pound debt when I came out. And I was like, what I want to do in life doesn't have anything to do with a degree. I wanted to go into business management or sales, or eventually run my own company. My dream was always to run my own company. So what I was setting myself up for made no sense like one down the line. So I said, this trading stuff's given me a bit of confidence. I'm not interested. I'm going to sack off uni in my first year. So I'm, college dropout. That was me. Dropped out. And big up Kanye West. It's an awesome album. But nonetheless, my journey started there. Okay. And my year one was rough, guys. Let me tell you. I've been training people for a lot of years now, and I train a lot of year one students, especially. And they say, oh, Aaron, like, I'm just having the roughest time with trading right now. This is happening, that's happening. And I'm like, yeah, I know. Yeah, I know. And they're like, no. Like, honestly, I'm like, yeah, I know. Like, trust me, like my first year was crazy. Guys, like, how many blown accounts I made. Like, I took every wrong turn. A lot of you guys, yes, a lot of you are in your first year. But what you must appreciate is that your first year is surrounded by an elite set of trading individuals. Okay, from Coach Max, Ryan DeFreitas, Jeffrey Rojas, David Schinkel, maybe myself, and the rest of the corporate trainers here, right? What's fortunate is that you've got the foundation, which is incredible, whereas I didn't have that. So my first year was rocky as hell. And Nicholas Lau, who's helping me present this call today, he would tell you this. He'll vouch for me this story, which made him laugh a bit. But Nicholas, do you remember the story about the binaries? Do you remember that?
I don't know how to tell it, but you go ahead.
I'm going to tell it. Don't worry. I told Nicholas a story, and he just thought, "Oh, this was just hilarious." But okay, so let me tell you guys how I first got into actually trading by myself, because the story I just told you was how I got into it. But at that point, I was receiving support from a signals provider, right? And I eventually branched away from that signals provider because Josh got to the point where he was like, I don't want to do signals, to be honest. I did this for you guys and it was really great, but my interest isn't to do signals anymore. And this is why I say to people, don't ever become reliant on signals, because if you will get used to that money if they're good. And eventually, if they do say, I'm going to pull the plug on your signal chat right now, guys. If they do that, you're going to be like, where's my money gone? So it is really beneficial. If you're doing signals, learn to be the signal right during that time, which is so important. Anyway, so at university at this point still, and my first episode of trying to trade alone was this. I had zero financial education. I barely knew what a chart was. And one of my friends called Sam, he called me up and he said, Aaron, you know, I work for this trading company, right? And I look at Sam, and he, you know, he's driving the Range Rover at like 20 years old or 18 years old, whatever. And you know, a couple of my friends that work with him, they were driving the Range Rover. And I was like, hold on, I need a Range Rover real quick. So what, this trading thing, what is that? And he was like, look, just make an account, you know, put a few thousand, whatever you got, put it in there. And we're going to give you some advice on how to trade this thing and make money. And I was like, okay, cool. Sounds good. Right. Like I'm at uni, like I don't really want to work a job. So like, let's do that. So I load up the account, and bear in mind at this point, guys, I'm at university, right? And I was self-funding my education. So all those years when I spoke to you before about me kind of going to work after school and stuff like that, and working my first couple of corporate jobs before I went to university, that was all me saving that money up. And then, you know, being a young man, I was spending money going clubbing, you know how we do, right? But then at that point, I was self-funding my education, right, in my first year. So that was costing me quite a bit of money, and I didn't have money to spend like that, right? So I loaded up this binary trading account with a company called Trading 212. I don't know if they're still around, actually. Trading 212. And I put some thousands in there. And it wasn't, guys, it was not money that I had to lose at that point. Let me make that clear. That was, you know, life isn't like how it is today, where, you know, I'm doing financially very well for myself. Back then I wasn't, because I was a student. Right. So it wasn't money that I had to lose. And I put it in the account, and I thought, okay, let me just watch this chart. And it was a bit like how you guys are trading with binaries. I was looking at that kind of screen. So I was looking at, you know, a line chart that was going very fast by the second, up, down, up, down. I was just observing. I'm just looking. Okay, it goes up and it goes down. It goes up, then it goes down. Okay. So maybe when it goes up, I sell. And when it goes down, I buy. I was like, okay, maybe I can trade. Maybe it isn't too hard after all. And I put on a couple of trades here and there, and I win some and I lose some, but there was nothing going on. It was just rubbish. And then I called Sam. I said, Sam, you said you were gonna, you know, give me some advice with this trading thing, man. I need some advice. And he said, yeah, just keep doing what you're doing, man. I'll give you some advice. Then he connected me in with another trade account manager that I knew. And I was like, bro, I need some advice. Like, you told me you were going to give me advice if I loaded this account up. And no advice. And at that point, I got frustrated. So I was like, do you know what? Screw them. I'm just going to do it myself. So what I started to do was, chart goes up, I would sell. I know 60-second expiry time on binary. And I'd watch it. Profit, loss, profit. And it would just, you know, it just bounce around, and I'd lose the trade. And damn, okay, let's do another one. Do another trade. Okay, you might win this one, but you do another one, you lose that one, right? So I didn't know what the hell I was doing. I was just placing buys and sells on the chart. Guys, before I knew it, this was day 2 when I started doing that. Before I knew it, within a week, I had less than 50% of my account available. Right? I had less than 50% of my account available, because I was slowly killing myself, right? This is called a slow death. I was in a slow death right now. I was staring in the face zero. That was what's coming next. I knew it. And I knew that because I looked at the numbers and I looked at my trades for a whole week, and I could see that I was slowly getting to the point where it's going to say zero. And let me tell you, like I said, I did not have the money to lose. It wasn't money I could lose. So I said, I need to sort this out. And I don't want to rely on Sam. I don't want to rely on his friend, because realistically, I don't think they're going to be able to help me in this situation. So I'll do it myself. So what I'm going to do, I'm going to figure out where the price is going, and I'm going to risk the whole entire thing on one trade and make my money back. And I'm saying, when I do that, I'm never trading again. Yeah. I'm going to make my whole money back on this one trade. And if by the grace of God, I can get my money back, I'm never trading again in my life. It's a scam. I hate it. That the people are lying to me. I said, I'm never trading again. That's it. So I said, okay, my heart's going. I'm nervous. I'm sitting at my university desk, and I'm like, oh my God, what am I going to do? So I'm like, okay. Buy. Okay. Bang, hit the buy button. And then it just hit me like a ton of bricks within seconds. I was like, what have I done? What have I actually, I don't get paid for another 4 weeks. What have I done? how am I going to eat? Like, what have I done? This was just, I should have took the money out and just begged for some more or worked or something. I should have done. What have I done? I'm about to lose everything I've got, right? In 60 seconds. Imagine losing everything you've got in 60 seconds when you've got nothing else. So I'm looking at the chart and I'm in a loss. And it was the worst trade because I was in a loss. And then the next 10 seconds, I'm in a loss. And I'm still in a loss. And I'm still in a loss. And I got ready to just be real upset. And within the last 15 seconds of the trade, it shot right back up. And it went blue. And blue means you're breaking even, which means you're not going to lose your money, but you get another chance at it. And I was like, oh, another chance, by the grace of God. And then it's green, and I'm winning the trade at this point. And I'm like, thank you, God. I promise you, just let me get out of this mess, and I will never do it again. Just please let me get out of this mess. I'll do anything. I'm so sorry. I'll never gamble, take advantage, anything. Just let me get out of this mess. I'm so sorry. And the final 10 seconds, my heart's beating. Now it's blue. It's break even. It's blue. My heart's beating. I'm just beating so fast. And it goes from blue to red. 5 seconds. 4, 3, 2. And now it looks like it's going to be blue. It looks like it's break even pretty much. And it's still red as it finishes, and the clock's turning over. And I slammed my laptop down, and I said, I just need to get out of the house. I need to go for a walk. So I didn't know. I felt sick. I couldn't breathe. I felt sick. I didn't know what to do. And I just needed to get out of the house. So I went for a walk, and it was raining, guys. Let me tell you, this day, you know, England rains a lot. This day was raining, guys. And the rain was pouring down. It was, you know, like the worst type of rain you see in movies. It was like that. I walked up my house, I had no umbrella, and the rain smashing me in the face, and my hair's all over the place. I'm just raggedy, you know, I'm soaking wet wearing a jumper. It makes no sense. I'm just walking, guys. I'm just looking at the sky, and this rain smashing me in the eye. I couldn't see anything. I was blinded by the rain, and I'm just walking around, just feeling real glum about myself, and just like, you know, wow, this is rubbish. You know, what should I do? Should I maybe get drunk tonight with friends or something? Or, you know, I haven't got any money to get drunk. What am I going to do? So anyway, it's walking. I'm feeling pretty depressed, but I'm like, do you know what? I always find a way, man. So I'm going to find a way out of this mess, you know, and I can't ask my dad for money or my mum for money because I've never done that. I wasn't about to start doing that. I don't feel comfortable doing that. So, you know, I don't know what I'm going to do, but we'll figure it out. I was walking around, walking. And then I walked back home. And, you know, at this point, I'm just soaked to my boots. You know, I'm soaked to the point where I know I've got to throw out my shoes. Like, this is just, I'm covered. I'm just soaked. Get in the house, and I go back to my desk because it's in my room, right? And I thought, do you know what? Let me just open my laptop real quick. Let me just check everything, because I kind of just slammed it down in a rush, right? Just slammed it down in a rush and just, you know, walked out. I thought, let me just come back and just check this real quick. So I opened my laptop, and I just wanted to make sure, just, you know, see the numbers in my account as 000, and just close it down and just be done with it and move on. I accepted defeat at that point. So I loaded up my trading212.com account or whatever it was, and I'd look into my account balance, and by the grace of God, it said that I had won the trade. And I was like, how does it, what? And what happened was, the trade wasn't finished calculating when I slammed my laptop down in a rage. And guys, by the grace of God, I won the damn trade. And this feeling is like, I just was in the most depressed state, thinking, what the hell am I going to do? And it's like, yes, God actually did give me another chance, like, to get out of this mess, like I prayed he would, right? And I somehow, my balance was there. And it was just, I was so happy. I was like, okay, I promise you, I'm never trading again. That is it. I'm done now. I'm done. 100%. I'm done. Next day, I'm on the phone to the broker. Look, I need my money now. Like now. And It's just, Mr. Crosby, I'm awfully sorry. Jessica, who can get you your money, isn't actually in the office right now, but I'll get to give you a call right back. So I'm sitting there twiddling my thumbs, waiting for my money to come back, right? I'm like, what's going on? What's going on, guys? Like, where's my money, right? And what I know now, what I didn't know back then, is that the market maker binary option companies, right? And they're not all like this, but I was with the market maker, okay? And their business model is all derived around, as soon as you deposit your money, it counts pretty much as revenue with that type of business, okay? Because they rely on traders basically sucking, okay? So they keep everyone's money in a high interest account. And what they want to do is keep you trading for as long as possible in those market maker binary option companies, okay? And trading 212 is one of them. So they make it a little bit more difficult for you to get your money in the wrong company like that. And I didn't know what I was doing at the time. So I was in the wrong company. So I called up again, like, I was told later on that a girl could just get my money back for me because I wanted to just take it out. And to be honest, I don't want to trade anymore. And they made it a little bit difficult. I couldn't really get hold of this Jess girl for a few hours. And I said, Sam, can you just get this Jess girl? Okay, they called me in the end. Mr. Crosby is fine. We processed it. Okay, I'll be with you in 3 days. Fine. And that was it. I got money and I said I'd never trade again. And guys, I don't know. I mean, I'm pretty sure you're here, so you must know. But if you've ever typed in Forex trading onto Google or Facebook or whatever, you're part of the algorithm. At this point, you cannot escape it. Every other YouTube advert is to do with Forex trading. You know, every other post on Facebook is starting to be about Forex trading. And guys, I could not escape it. And the more you see of this, the more you start to realize that there are some people out there that have cracked the code. Whatever this code is, they've cracked it. And I was like, I keep seeing, like, oh my God, these young kids with like BMWs and Mercedes and Range Rover and, you know, flights, you know, in Dubai. And I'm just like, I'm built for the guys. I was like, I'm built for that life. I need that life now. Like, what the hell? So I couldn't escape it. I couldn't escape it at all. And I said, I promised that I'd never do this again, but there's something about this Forex thing that I cannot just get my mind off of. Every day and every night, it haunted my mind. Is like, I can't get out of my head. Because what I was, guys, you got to imagine at this point, I've quit university and I'm still in the mindset that one day I need to run my own business. But at this point, I'm back in the city, in the corporate life, in the sales job, smashing phones, you know, going to meetings, you know, being late to meetings, getting off the train and, you know, covered in rain and covered in sweat and, you know, all these things that you do when you're, you know, corporate London. And I just can't get away from this Forex thing. It's just still in my face every time I go on Facebook or YouTube. So what I started to do is I started to find out, you know, who knows how this thing works? You know, where are the the Forex gurus, right? Where are the Forex gurus? And one thing that I realized is there are some gurus out there, right? There are some people that know how this thing works. So I started investing in their training. Okay. And slowly but surely, I started to understand, okay, this is what a support is and a resistance. Okay, and this is what a candlestick pattern looks like. Okay. All right. And you shouldn't buy there. You shouldn't do that. And you shouldn't just buy or sell anyway. You need certain rules-based systems in place. And I could then start to make sense of the charts. I started to understand why they were doing what they were doing. And at that point there, it made a lot more sense to me. And I just kept repeating the process. But guys, I don't even want to promote that my year one was successful because it wasn't, guys. I was doing the awful things. I had points where, you know, I was $30,000 in drawdown in one single day. We blew accounts that were over $80,000 balances. In my year one, guys, I took some heavy risks. I had some success. I had some successes. And off the back of those successes, I got very cocky and I bit off more than I could chew. And I blew some terrifying sized accounts. Okay. That was my money or friends' money or investors' money. Like I did some crazy things in year one, which you know, it's all part of the journey. And I look back and laugh now, but you know, when people say, Aaron, I've had a crazy first year, I blew a 1K account. I'm like, bro, like, yeah, I did some stuff too. You best believe. But the guys, my point was that year one gave me enough of a taste of what this Forex thing is. Guys, do me a favor. If you've ever made, right, $100, okay, in a day on Forex ever in your life, just throw me a one in the chat box, guys. Because let me tell you something. If you've ever made $100 in the Forex market, I guarantee life will never be the same again. Because Forex is an art, okay? The reason that Wall Street and all the top financial centers of the world trade Forex like they do is because it's not gambling, okay? The world financial centers don't sit there and throw, roulette wheels around. They do trading, okay? So trading isn't gambling, whatever anyone tells you. Trading is an art, and it's a fine art, and it's one that you have to respect entirely. Because if you don't respect trading and the markets will run all over you every time. And that's what used to happen to me in my year one, because I didn't respect them enough. I didn't get, when you have been trading enough, you'll learn to give the market so much respect. The market is such a powerful thing. And if you don't give the market the respect, the market will not respect you or your account. Okay. But when you do get to the point of giving the market respect, your whole entire life and the charts will change. But you have to give the respect of understanding all of the fine intricacies of the market, and then understanding that unless you give the market that level of respect, you will never be profitable. And that's what it came down to. But guys, when you make your first $100 in the market, it will change your life forever. And that is exactly what happened to me. But guys, that is a brief start of my story. Nicholas, I'm trying to be brief, brother. Sorry, man.
No, because see, what we're going to do here, we're going to do these with Aaron more often, but I wanted his story for one video. The next time we do this, we're going to jump right into Q&A. We're going to have all these recorded. It was very important for me for you guys to know who your upline is, who one of Epic's educators is. So it's not just a pretty face. He actually has a story, right? So let's get into these questions. We have about 30 something questions lined up. We'll try to run right through them. And let's see. Our first question is from Haresh Ramaswar. He said, what is the key to consistency, or at least for you, what is the key to being consistent about this? And, what type of habits do you have?
Yeah. Repetition is the mother of success. This is what I teach, and this was what I did to become good. And this is what I categorically teach to all of my students, and I have for several years. What I did is I just found a setup that I knew to be profitable, and I kept practicing until I made it profitable myself. Now, if you practice on the chart in real time, that's all good and well. It might take you, some months to make that setup profitable for yourself. But if you do want to make it happen faster, you just need to load up soft Forex simulator, go on the chart, and just do this thing over and over every single day until your account that day is a profitable balance, or your account that week is a profitable balance. This is the thing, right? And this is the thing that a lot of year one traders, and I had this conversation actually with my girlfriend today, because she said, look, I want to get into trading next year. I said, look, you can trade for sure, but you need to understand something before you get into this. Trading is based around mathematical probabilities and statistics. And I need you to understand that I can give you profitable setups, and you're going to take them, and some of them will work and some of them won't work, but they will look no different. And you need to get your head around the fact that it's not an exact science, it's a game of probabilities. So my answer to that question is, you just need to find something that works and that works, and just do it until you can make it work. And if you can't make it work, don't just think, I'm broken. It might not be that. We all have different styles. It might just turn out that the style you're trying to do is a swing trading style, and you're just too fast. Your brain moves too quickly. So you need to be scalping. You need that simulation. So you have to find out what your personality is and how that would work with your trading style. So repetition, guys, is the mother of success, I promise.
Okay, great. So, some people have a little more technical questions. So I don't know if you're going to want to bring up your charts. We'll just take it on a case-by-case basis. But okay, Marianne had a question. When you see divergence, because it tends to be a big topic over here the last couple of months, how do you know when to enter a trade? Do you use that theory at all?
I used to use it a lot in the early days. I don't use it as much nowadays, because I just have certain setups that I just rinse and repeat like the best of them. But divergence hasn't ever been majorly my thing. If I'm honest. I know some great divergence traders, but I do know the answer to that question because I used to use it a lot. So if you want to use divergence, okay, you still need to couple it with confluence. Now, divergence is just a confluence, which is just a type of confirmation. What makes me successful in trading is that I'm incredibly good at stacking a high number of confluences. Now, let me give you an idea here. If you're trying to take a trade based on a H1 candle, okay, in a market structure level, what you've got there is a H1 candle and a market structure being bullish, for instance, if you're trying to buy. So you've got what you call two confluences. Now, if you throw in a moving average and it's bounced off that, it's a third. Okay. If you throw in a H4 level, that's a fourth. If you throw in a daily level, that's a fifth. A daily candle, sixth, right? So what you're doing here is you're stacking confluences. Now, your divergence is just the confluence. Your divergence might be on the stochastic, it might be on the RSI, something like that. But what you need to do in order to make that confluence successful for you, if you're using divergence, is you need to couple it with other confluences. Okay, so don't take it unless that's coming off of a key level. Maybe it's breaking through a resistance level, which was a previous market structure higher high. So you're expecting another move to the upside, okay, because it's broken the previous high in a bullish trend. Or maybe that the divergence has appeared on a pullback to the most recent market structure and then give you some bullish candle confirmations. Okay. And the daily candle previously was also bullish. So you basically have to couple it with other confluences and ideally key levels. Because if you're going to take price at a key level, that's usually a safe thing if your confluence to stack it up in line. But hopefully that answers your question.
Aaron, while we're on that topic, some of the newer people, they don't know about the simulator, and I think we still have one more session to do on that. So if you could just catch them up on that while I get the next question ready. And I don't know,
Yeah, for sure.
did you make Sarah a co-host, or is she busy?
Yeah, Sarah's a co-host, but she's she's in my team and she's headhunting like crazy with these.
Oh,
So she might be headhunting for us guys.
no problem. Okay, go ahead and talk about the simulator.
Yeah, simulator guys. If you go on to Google and you type in, if you go on to Google and you type in soft Forex like this, you'll find that there's a company that makes some great Forex simulation software. That's what I use. And just if you're part of the winner circle or lines down and you go in there and you just hit the top right search bar, there'll be a little search icon. If you type in simulator, you're going to see a simulator training video hosted by myself on YouTube, and I'll teach you there how to use it.
Okay, great. So we'll put some information out about that. But basically, what a simulator does, it allows you to go back in time and see what the market did. So you can even, when the markets aren't running, you could sit there and study, and you could fast forward and rewind. So you can set up your lines, and basically you can anticipate what's going to happen, and you can go years back into history. So it's a great way to bring up your learning curve really quickly. Okay, Sarah said you can add her back, and then okay. So the next question is from Shalisa in Grand Rapids, Michigan. So this is a question about taking trade signals. So when taking take profit 1, 2, and 3, do you suggest opening up multiple positions or partially closing one? Or if partially closing, do you have a personal closing amount or ratio for each take profit that you go by?
Yeah, great question. I get this one a lot actually, and there is a very specific answer to this question. Now, there are a couple of main styles of how we recommend that you should use signals. Okay. And the one I like to recommend is a variation of these two. 1 second, and I'll just come back to that in a sec. But one of these two options, right? Let's say a signal caller has given you a trade for a GJ buy, right? GBP JPY, and they've given you 3 take profit levels. Now, what I recommend you to do is this. You should take the trade and divide your total position by 3. Okay, so let's make a wild assumption that you were going to do a one lot trade. Okay, because your account size was adequate for that. Then if there's 3 take profits, you want to do 0.33 lots for each trade. So you're dividing your total position into 3 parts. Now there's different ways you can take partials. This is by far the easiest in my opinion. Okay, so now you've got 3 trades. but you need 3 trades because you've got 3 take profit targets. And the idea, guys, the reason there are, let me make this very clear, because I think this is not clear at all for most people. The reason that we give you 3 or multiple take profit targets is because we want you to take profit. Okay, I know I know it probably sounds quite obvious because it says take profit, right? Take profit 1, take profit at number 1 position, take profit at number 2, right? We want you to take profit. Okay, that's the whole point. And I feel like this is like a very confusing topic because some people are just like, oh, why don't you just like, take profit at TP2 if you want, or just, wait to TP3. Guys, we want you to take profit at those positions, right? So if you're dividing your positions by 3, one of your positions you should put in the take profit the number that is at TP1. And for the second position, you should put in the number for TP2. Same for the third. So at each time those targets get hit, money in the bank. Okay, TP1 gets hit, money in the bank. TP2 gets hit, money in the bank. And maybe the price comes all the way back on you now, all the way back to your entry point. So after TP1 is hit, I recommend that you put your stop loss back at break even for all trades that are back in the balance now. Okay, because then if the trade if the trade went right down, you've still made money. Okay, or if TP2 gets hit and then the trade comes right back down, you've still made money. That's the way I recommend you to do it. The variations of that is if the trade, for instance, goes and hits TP1, some people will drag their stop loss to TP. Sorry, if the trade goes and hits TP1, they drag your stop loss to break even. Trade goes and hits TP2, drag your stop loss to TP1. Trade goes and hits TP3, you're at the market with all 3 positions. But if the trade does come back and doesn't hit TP3, you get stopped at TP2. So TP2 got hit twice and TP1 gets hit once. So there are variations on the theme, but the point is, please, please, please take profit at those levels and protect your balance at all times by dragging your stop loss to break even at the best available opportunity.
Okay, so
hopefully that answers your question.
Just to carry on from that question, some people, when they see a trade, they'll open like 5 or 6 positions at one time. What is the purpose of that?
It'll be because of that reason. So they're looking to take partial profits. It just gives the trader more control over that position. So they're not over leveraging 5 times. They're dividing their whole entire position.
Okay, great. And Coach D, to answer your question, a simulator, demo is you can trade live on the market right now. A simulator, you can go back in time and go practice and stuff. So it doesn't have to be live on the market. You can go look at historical data and you could basically look at the chart and it's like, okay, before the next candle comes out, what would I do? So it's kind of like, I guess you can call it like role playing or something. But okay, so Coach D actually has a question here. So if I want to scalp, what time frame should I look at on the charts?
If you want to scalp, look, here's the thing. If you want to scalp, there's many, many, many ways you can do it. You're going to have to find a style that works for you. But me personally, if you're asking how I scalp, I use the 1-minute chart, the 3-minute chart, the 5-minute chart, the 15-minute chart. Very famously, though, I use a lot of the 1-minute chart and the 5-minute chart. But the 3 minutes also excellent. And you can be a fantastic scalper on any of those charts. It doesn't really matter. It's just about if you can do something that works, really.
Okay. What is the purpose of indicators for charts? Like from what I understood that I've been taught, indicators are to help you stay out of bad trades. Is that true or false?
No, it's to be a signal.
It's to be a signal.
An indicator is a signal. So that's why, for instance, on the stochastic, it's called the signal line, right? And the RSI going above and then beyond is a signal. So it's all to do with giving you a signal. So there's all different types of indicators, oscillators and trend-based signal, trend-based indicators, etc. They're great if you use them in conjunction with raw price action. If you use if you use an indicator by itself, that's a bad idea. Because let me tell you something. Go on the chart and you will see that, yes, okay, with an oscillator like a stochastic, you'll see that when it's oversold, price tends to come down. And when it's overbought, price tends to come down. And when it's oversold, price tends to go up. But you will find if the market's really bullish, it will just stay overbought for ages and just bob and weave in a tiny little extreme area, and eventually when the market does pull back more, it will pull back, right? But it's I promise you, it's not reliable. So you have to use it just as a confluence, because if the market goes in one direction for too long, it will just stay that way at the top of the oscillator.
Okay, so it's aside from Coach Max and Mr. Luciaga's 20 pips and dip indicator, what other
Yeah.
indicators do you like to use?
I like to use the stochastic, okay, which essentially is just an RSI with the moving average. So it's not like majorly different from an RSI, but it has a moving average. I've used moving averages before quite a bit, more so in my early days, not so much now. To be honest, guys, I'm not a major indicator person, and that's why I only like to use a stochastic every now and then for a bit of confluence. But the kind of confluence that I like, guys, are the actual kind of price action confluences. I'm not really an indicator guy. I don't promote indicators too much, if I'm honest. Now, the 20 pip and dip indicator, the reason that works is because it's based on market structure, which is a key principle of the charts. That's why it's effective. If it was just a moving average or whatever, it may not be so effective, because in a range of market, moving averages aren't so effective. But the reason the 20 pip indicator is actually good and something I do promote is because it helps newbie traders to identify market structure where they may not be able to in their infancy, if that makes sense.
Got it. Okay, so we've got a question from Christopher in Nigeria. Hi, Aaron. I just want to know how to study currency pairs as a beginner trader. We're often told to pick 3 pairs to study, but I don't know how to actually study the pairs besides following the news and marking up the chart. So I guess when you're telling somebody new to pick a couple of currency pairs, what paths do they take beyond that?
Well, you can really follow anything you want. Now, I'll just give you a scenario in my experience. My mentor, I said, look, I need to be good at trading. Okay, one of my long-term mentors. And he said, well, look, if you want to be good at trading, you need to concentrate more. I said, I do concentrate a lot. He said, well, Aaron, you on your trading view right now, you've got like 20 pairs loaded up. And I know that you watch them all because you send me charts and all of them pretty much. And he said, you got to stop doing that. He said, I need you to just concentrate on one pair for the next month. And I said, I need to make money, man. Like, don't waste my time. And he said, you're never going to be good at trading if you don't learn to concentrate. So he said, I'm going to delete all the pairs on your chart and I'm going to leave you one pair. What do you want it to be? And I said, GJ. And that is my favorite pair to this day. But basically what he was trying to teach me is this: when you're not profitable, the reason that you're not profitable is for various things. You need more knowledge, you need more experience, etc. Right? You need to, nail down your strategy. But unless you're able to concentrate really highly on what it is that you're looking at, you will never be able to get that as quickly as you can. Because if you've got up 5, 10, 15 charts, you're just going to be all over the place. So you have to find you have to centralize your focus. I chose GJ, right? Now you ask me what pair should I choose? I don't know what to do. I'm going to just say this, right? What have you done so far? And what do you like the most? I can't tell you what you like the most. And you may not even know what you like the most. What I can tell you is my favorites are GJ, GU, EJ, EU. Now, I do recommend EU to be one that you maybe look at because it's the most liquid pair in the market, which means the most investment goes into Euro USD, which means the spreads are very low. It means the price action is very regular and current. And you might want to mix it in with an exotic like GJ. GJ is an exotic. If you're a scalper like me, you'll love GJ because it gives you enough pips even on the 1 minute time frame. My average trade in the 1 minute time frame can sometimes be about 10 pips, and all you need is 20 pips a day to be successful, really, right? So you can get that in just minutes sometimes on the 1 minute time frame. So it's amazing. GJ is GBP JPY, so the pound yen. Yeah.
Yeah. So sometimes we just use the first letter of both names. So
Look, Nicholas, sorry, let me finish up. So basically, sorry, before I move on from that point, let me just give you a bit more flavor.
Mhm.
If you think, this is good advice, if you think that you want to be a scalper, choose something that moves a lot. It means it's got a high ADR, average daily range. Okay, trading lingo. GJ moves quite aggressively. It moves quite far in the day. So if you can find a pair that moves quite far in the day, but still has relatively good spreads. So you're going to need, again, if you want to be a scalper, you need a couple of things: something that moves enough and something that has a low spread so that it makes your time worthwhile and makes your trading realistic. I like GJ and I like IC markets. IC markets on GJ is like a 0.3 pip spread, but you might find GJ on another broker where it's like 2 pip spread, and you can't do that if you're scalping in the 1 minute because it'll be huge on your screen. You can't do that. It doesn't work. So you have to find the ideal conditions. If you find some of the IC markets, you guys, if you want to scalp, you need a raw spread account, or some brokers call it raw, other brokers call it zero account. But essentially, you need something with the minimum spread, and you need something that moves far enough. If you think, I want to be an intraday trader, it doesn't matter too much. A pip or 2 spread won't matter too much. You still try and bring it down, but you could trade anything then. You might trade EU, because EU, you might get intraday trade 20, 30 pips or something, and that's fine. But intraday on GJ, 100 pips, right? So you just have to find what style do you like, and then cater to that style,
So
using the
basically,
pair, etc.
like, don't try to scalp on Australia and New Zealand. That's not going to move enough.
Yeah, I mean,
so yeah,
not
you want to use the
really,
high
no.
volume. If you're going to scalp, use the high volume pairs. All right. So this is a really good question that my buddy Jan posted. He said, I have a question about leverage. I'm currently using a demo account where I have a balance of under 800 using 100 leverage as of this morning. I've been told that my leverage actually needs to be higher for a lower balance to use up to $500 and $1,000 demo account. I want to be a conservative trader. I don't want to over leverage. What do you say about this? And this kind of reminded me of when we had talked a while back, and you said, I mean, even you in your advanced trading, you still like to use maximum leverage. Is that correct?
Yeah, max.
Okay.
Guys, if you look at Ryan DeFreitas, the other day he turned I think it was a $500 account into 8K in 1 day, right? You cannot do that using low leverage, right? When you become an advanced trader, you want to do some advanced SHIT, right? Excuse my language. All right. You don't want to waste your time trying to get 1% on a 10K account. That doesn't excite us anymore. When you become an advanced trader, you're trying to do stuff that entertains you. And what entertains me, guys, is I've got larger kind of sized accounts where I make smaller returns in a month, but I also every month roll with small account sizes and try and flip them as many times over. Flip by scalping in the 1 minute, right? So taking loads of trades within a day. That's what Ryan DeFreitas does as well. He takes lots of trades and he flips accounts, but you can't do that using low leverage because you won't be able to put a high enough lot size on. If I try and do that with like a 1 to 30 leverage, I'm not going to be able to do anything. It's just going to be tiny lot sizes, right? In comparison to if I have a 1 to 500 account, I can max it out. I can get bigger lot sizes per my account size. So a leverage is there to protect you, right?
So Aaron,
It's there to...
yeah. How would you explain to somebody that's brand new, like visually, what is leverage?
This is actually a confusing one to get your head around. But basically, before the time of retail brokers, that you weren't able to go in the charts and trade. Okay, that was something that stockbrokers did, and hedge funds did and stuff, and you can invest your money there. There came a point, okay, where they wanted to make it available for the masses, and they call it now retail trading. But what they need to do for you to be able to actually transact in the market is give you something called leverage, where basically they lend you artificial money for you to then trade within the market, but it would still look like the actual money that you have on your account. So the broker will put that artificial money into the market. It trades and circulates, and then it on your account it will still look exactly as it is. But you would see, like, for instance, like, if you wanted to put on a 1 lot account, it would say that your volume is like 100,000, right? It's because they have to give you that leverage. They have to give you that artificial money for you to transact in the market, for you to actually participate, which is why normal people we couldn't trade before, because we didn't, the normal person hasn't got $100,000 to put into the market for just a tiny little return. That doesn't make sense. So it's an artificial way of being able to let people like you and I transact in the markets. So essentially, when it comes to actual leverage on your account, what they're doing there is they're allowing you to protect yourself as well. So that's how it works on the other side, is they want you to protect your account by only giving you a certain amount of leverage per account size. So that if you wanted to, for instance, put on a relatively simple trade on your $1,000 balance, if you were to choose 1 to 30 leverage, you can see on the internet there's mathematical equations to show exactly what numbers you can get in return. But it essentially, if you try and put too big of a trade on, it would say no, you can't do that. You haven't got the margin requirements to do that, so you haven't got enough money to do that with your sized account. But if you say, for instance, had a 1 to 500 leverage, it may allow you to do that trade because it's allowing you to be more aggressive. So like, for instance, when you become good enough and maybe you say, oh, I might want to do an FTMO challenge, right? So I might want to get funded by a prop firm. What you're going to see there is a different type of accounts, low risk accounts, medium accounts, high risk accounts. And the high risk accounts may have higher leverage versus the lower risk accounts will have lower leverage, and they would expect a lesser percentage gain on that monthly period. So it's all about, account conditions. But if I'm going to give you my advice, you don't need a ton of leverage until you become good. Okay. Until you want to challenge yourself, you can be fine with 1 to 50 or something like that, because you're not going to be doing more than 1% per trade or 2% or 3% until you get good anyway. Ryan DeFreitas might do 5 or 10% per trade because he knows what he's doing works very well, and he's trying to flip accounts, so he'll be risking a lot more. But you don't risk 5 or 10% of your account until you become very good. Don't challenge yourself like that.
Okay, so while we're on that topic, Coach D said, as a beginning scalper, what leverage do you recommend and what lot size? I mean, lot size is based on your balance. So if you're in demo, I think Ali had recommended one time, if you had $1,000 account, 0.04, or do you have a different parameter?
Guys, I'm all about percentage risk. Okay. If you want my opinion, it's not accurate enough to say I recommend 0.1 lots per $1,000 account, because it's not, let me tell you why. 0.1 lots on GBP CAD as a stop loss might wipe out $100 on your 1K account, which is 10%. And then 0.1 lots on USD JPY for a stop loss might only wipe out $20 or $15. So that doesn't, you don't want one loss to be 10 times bigger than another loss. It has to be the same. Otherwise, you're just gonna be all over the place. You need to look at it more systematically than just giving a random number like that. You have to be risking a percentage of your account. Now, if you don't mind trading on MT4, then you can use expert advisors that you can drag onto your chart, and they'll say, look, what percentage do you want to risk of this account? And it will give you a lot size to just tap in, right? If you don't want to do that, I know a lot of you guys like to trade on your mobiles because, first year traders, etc. Go on babypips.com, lot size calculator, or my FX book, lot size calculator. Type in, I've got £1,200. And I only want to risk 1% of my stop loss is 30 pips, and it will give you the lot size. But you have to be accurate, guys. Don't just do a random number. Not if you can help it anyway.
Yeah, there's even that app, I think it's called Stinu. Let me put that in. If you go in your app store, Stinu, it'll do your lot size calculations for you. Okay, so next question. Yeah. Steven from New York had a question. Most people in the world have no understanding of what a pip is. So how would somebody calculate the ROI? Let's just say they had a 30,000 pip week on a $1,000 account. Is there an easy way to calculate the ROI?
Well, let me first explain what a pip is. A pip, guys, is just like, imagine if I pulled out a ruler right now. A pip is just a centimeter or a millimeter. It's just a measurement. It's the way that we measure the market. The market, in the Forex sense, if you're trading properly, it's about distance. How much distance can you get in a buy trade, and how much distance can you get in a sell trade? But you have to measure distance using a kind of a metric. So a pip is just a metric. So it goes points / pipettes to pips. Okay. So you have to understand that it's just a centimeter. Like, if you want to keep it real basic, it's just a measurement. It's just the way that we measure it. It's not as simple as saying, if I'm making a 300 pips, for instance, on a $1,000 account, how much money is that going to make? It depends on your lot size. But then you shouldn't be just trading purely a lot size. You should ideally, guys, be trading using a percentage of your account. So then it becomes a point of how much risk to reward has that trade yielded me? Now, if that trade was a 3-to-1 and you risked 1% of your account, then you know you made 3% back. So you shouldn't be looking at how much pips has that money given me. I know on a kind of very kind of I know in a very kind of like beginner level, it's like, oh, you need lots of pips to make lots of money in an account because it's £1 per pip. I know it looks that way, right? It's more about what has that percentage given you? What was the risk to reward in that trade? And how many reward have you actually finished the day with or month with or week with, whatever it is? It's all about percent, guys. It's all about percent and risk to reward. I promise you. Pips and points are just a byproduct of that.
And we should never risk, is it more than 2% on a trade, or is that variable?
It's subjective, you know. I would recommend for beginners to risk anywhere between 1 to 3% per trade. Guys, I risk a lot more than that when I scalp. Okay. And it's because I'm advanced and I know what I'm doing. But don't ever risk more than 1 to 3% if you're, you know, getting into the game, or, you know, or if you're trying to take signals or something like that. Only ever take substantial risks when you're extremely confident in your ability.
Yeah, and while we're on the topic of signals, your account only has so much money, but there's signals flying all over the place. You can't take every signal. You got to take one at a time, let the trade complete, and then look for a new one, because otherwise you're gonna hit those margin calls if you overextend yourself. Okay.
You just need to. I mean, the thing is, look, you can take as many signals as you want as long as your account can handle what you're doing. As long as you're being very sensible with how you're trading. You know, you might have a $1,000 balance, but you're only doing 0.01 lots per trade, right? And if that's the case, then of course you can handle, you know, a good amount of signals. But it's just about being smart with how much you're using. You know, if you imagine this, right? If you were to do 1 to 3% per trade, but you know that your average signal provider chucks in 10 signals per day, you don't want to have, you know, 30% of risk on the table every day, do you? You only want to have a couple of percent or maybe 5% risk or something like that. So then you have to realize, then I can't do 1 to 3% per trade because I know that I'm going to get 10 signals today. And you know, then it's called exposure. What's your maximum exposure? Okay, I feel comfortable with risking 3 to 5% per day maximum exposure. So if that's going to be the case, and I know I'm going to get 10 signals, I need to divide that by 10, right? And then that is my risk per trade. So you have to, I know again, it's annoying, but yes, you have to be a bit mathematical about it if you want to be really savvy.
Got it. Okay, I got a couple of simple questions coming up. What is the best time to trade, or what's your preferred time to trade? What sessions, or? And that's from Whitney.
Here's the thing, right? I nowadays I like to make trading enjoyable for me. I never used to be that way. I used to make it very horrible for myself, but I like to make trading enjoyable because I want to enjoy my life. Trading's my life, so it's got to make sense, right? Guys, I wake up in the morning, I get in the shower, I have some breakfast, and I look at the charts. And if I see something, I'll take it. If I don't, I'll go, you know, do some stuff, come back to the charts. But the best times that I like to trade is London Open, an hour through London. I'll still sit there and I might trade the whole London session. And I like to trade New York Open. And I might trade them for 2, 3 p.m. in the afternoon in the UK, which would then be kind of like late morning in the US. Actually, no. It'd be just coming across the kind of what do you call it, kind of lunchtime board in the US. And then, you know, kind of as it gets to like 3, 4 p.m. in the UK, which again is kind of lunchtime in the US, I then will be pretty much done for the day. I could trade way longer into the day, but for me, I'm just trading London and New York, and the opening hours of those sessions have the most volatility, so I like trading those, and then I'm done. But with my style, guys, I could be done probably in about an hour every day if I was comfortable with that, because I can do tons of trades on the M1. But I like to push myself. So
while we're on that topic, when you log on in the morning, do you scan through all the markets real quick, or do you only have a few markets you look at?
What I do if I'm scalping, which is what I do mainly, I will go on to the intraday chart. Sorry. Now, I always start my day with an intraday bias. Okay. So, we might have been analyzing GJ and GU, etc., from an intraday perspective and understanding where they are in the cycle right now. And I'll always look for an intraday opportunity or see, okay, what can we have intraday here? Okay, maybe it's not yet. I need it to come back to this level. I need a H4 candle, so it's going to be a while. So while that's all happening, I'll be on the 1 minute chart and the 5 minute charts, etc. And what I'm looking for is I'm looking for momentum. So I'm a momentum based trader. Okay. What I like to see is I like to see something that's moving very nicely. So I don't really care too. I like GJ a lot, but I don't care too much what pair it is, as long as it's moving nicely. My style means I can scalp pretty much any pair, right? But I need to see something that's moving sweet as hell. So I'm going through the charts, bit sideways, bit sideways. Oh, big bullish candle. Okay. And we've broken out that market structure. Nice. Okay. Shortlist. Okay. Huge bearish movement. And that's because of the DXY, which is the dollar index, is very weak. Okay. Good. Shortlist. So I'm going through and I'm shortlisting pairs that have the really strong volatility. And what I'm looking to do is I'm looking for continuation trades alongside that volatility. And then when it's ready to break structure, I'll look for reversal trades in the opposite direction. But I'm looking for something with volatility. That for me is really key.
Okay, so we got a question here, and it's from James Bond. So I don't know what James
Hey,
Bond was, but James Bond wants to know what pair has made you the most money over your career, and what he's struggling to
GJ.
find a pair. GJ, that is your thing, right? I think
Yeah,
that's fine.
GJ.
It's self-explanatory based on the past few questions. And then somebody has a
Yeah.
question in the box. So Sandra, um, indices for beginners. What's your views on that? I know a lot of people see that people are making money on the indices and they get kind of attracted to it. How do you handle your students when it comes to that?
Guys, if you want the honest answer, I'm a Forex guy. Okay. It's what I learned. It's what I got good at. And yeah, I could sit here and be like, maybe if a couple of years ago I got really heavily into indices, maybe I could be this like beast indice trader. I just kept going with Forex because it gave me everything I needed. I didn't really feel the need to look elsewhere. It's a bit like, when you've got your, really nailed down strategy, you're like, I'm sure there's like tons else in the market, but all I'm looking to do is make this better, refine this a bit. So guys, I love Forex. I love scalping. I love GJ. I love, the pound pairs. I love the 1 minute. I love the 5 minute. And that's what I do really. I've done US 30 here and there, but I'm not going to call myself like the king of US 30, right? That's Domo. That's Domo US 30, baby. But guys, I'm just about, just doing for me what works. And when it comes to indices, look, they're very aggressive, which means you can make a lot of money, but it also means you can lose a lot of money. And because it has the high level of risk, because you can lose a lot of money, because it's more aggressive, you need a bigger account balance to do it, and it moves more pips and more points, etc. It means that it has a high chance of taking you out of the game. So just be careful. I think, yes, you can trade it as a beginner in year one if you have a decent sized account balance and a percentage over points and pips. Guys, don't bother. Let me tell you this right now. Please, for the life of you, don't bother trading US 30 if you're thinking about, pips, points. Okay. Honestly, only trade it if you have a $1,000 or $2,000 account size and you actually understand percentage per trade, right? Risk that 1% or that 3% per trade if that's the only thing you're trading that day, and just focus on percentage, because you do not want US 30 to take out 50% of your account size because you were focusing on points and pips. It would just wipe you out. Focus on percent. It will keep you safe.
Yeah, you're absolutely right. I've personally experienced that. We got a really good question here from
Yeah.
Malik in Houston. He said, "How do you identify liquidity?"
A couple of ways. Liquidity, you can identify by a knowledge of the markets. Okay. The pound pairs, for the majority of the case, GU, GJ, they're liquid, they're traded a lot. Euro USD is the most liquid pair there is. Now, you'll find a lot less liquidity in some of the weird exotic pairs. The one good way to find out where the liquidity is by looking at the spread. If you see a spread and it's absolutely huge, the chances are it's got low liquidity, right? Liquidity, all liquidity is, guys, is how much money is invested in the market on that pair. So the reason I say Euro USD is the most liquid pair is because it's the most invested currency that there is. Okay, currency pair. So that means that the conditions to trade that are very good. Now, when you take a trade in the Forex market, there needs to be someone else on the opposite side of that trade. Okay. So if you want to be a buyer, there needs to be a seller in the market. And that's why they've got these special desks. They used to have desks where they have to literally in brokers just approve orders manually. Okay, we need volume this side on sales, we need volume this side in buys, and we can't put all these orders through until we have enough volume on this side, right? So now they have things called ECM, which is like electronic desk, essentially. So it uses algorithms to understand the liquidity in that broker or the liquidity in that market, so it can transact for you automatically. But essentially, if you can look at a chart like EU and you can see, the broker spread is like 0 point something pips, and versus, GBP, SGD, like, oh God, the spread is like 15 pips. Whoa! Like, do you know what I mean? So you can see the liquidity by looking at spread. Okay. And you can understand using your knowledge what pairs are usually more liquid than others.
So while we're on that topic, some people probably don't even know what a spread is and why do spreads vary by brokers. So how do you explain that?
Guys, the spread is basically something that all brokers have. Now, look, brokers are there to make money. I've got friends that own brokers, so I know some pretty dirty stuff about some brokers. But that's why it's important to kind of get in business with reliable, regulated brokers and not the ones that are trying to slip your orders. And some horrible stuff happens with unregulated brokers sometimes, guys. But essentially, this is the point. Spread is one object in the business model that brokers have to make money. Okay. Another is commission. Some do deposit commissions, some do withdrawal commissions, some do spreads, some do, what do you call it? Oh God, there's loads. Even when it comes to slippage, that's still a form of making money. So all of these things are actually in their business model. So brokers, like any other company, they're trying to make money, right? So they say, okay, if we have a spread of this amount, then essentially it's just the commission that's visually on the chart. Because if that spread is 1 pip, for instance, and you're trading £1 per pip, that's, sorry, if you're trading one lot, which is £10 per pip, they know that 1 pip on your chart that you've got to make up before you make any profit is £10 out of your balance, because you've got to go £10 in profit to get to break even, right? You've got to go 1 pip in profit. So it's just the commission that is visually on your chart. And then if you look in your terminal, you'll see, it's $8 per round turn for one lot on my broker. So it's actually cost me $8 plus spread. So the two costings you're looking at when you're trading is spread and commission. And then after your spread and commission have been made back on the chart, the rest of that is then your actual net profit. Okay. But spread is going to vary. So on the less liquid pairs, the spread is going to be bigger. So you've got more room to go, before you can get to your profits. You might want to go on like me, you might want a low spread broker like IC Market, but then what you will realize is they sometimes then have to recompensate that by taking a higher commission per trade, because they've got to make the money somehow, right? So it's just a money making thing, guys.
Cool. Okay, we're down to our last 10 minutes. Ambassador Anand has a question. Your buddy.
Hey.
He said, I sometimes sit down to trade, look for setups, but I don't see an opportunity to enter with enough confluence. How do you handle yourself if you go a couple of days without getting in a trade? If I just focused on one pair in a specific strategy, sometimes I feel like it's a waste of a day or it's going too slow.
Oh yeah. I went through a really tough time with this when my mentor, was like, I need you to trade GJ, and he was teaching me day trading, and the rules were really specific. And it's like, I'm not getting a trade for like 2 days, dude. Like, this is killing me. Like, I need to trade every day because I'm a sales guy, right? So I'm used to smashing phones and like being productive. And that was what was making me money in sales, is being productive. So I don't feel productive. I'm sitting here waiting for a trade, right? So you have to understand that it's the style. It's the style that's not giving you what you want. And if it's the style that's not giving you what you need to find a style that gives you what you need. Now, my style gives me what I need because I'm on the 1 minute, baby. I'm scalping, I'm scalping, I'm scalping. And what I need to feel productive is I need to be working. And for me to be working, I need to be trading, right? So this is something I do teach because at the minute with Epic, especially, I'm teaching people how to day trade. Okay, because that's where I think you should start to learn trading, is day trade. With day trading, I'm saying this. I'm saying analyze a lot, but trade sometimes. Okay. So it means I'm helping people in their year one to exercise patience. Okay. If you can sit with an advanced trader and you think, oh, I really want to be a scalper. If you can sit with an advanced trader, they can, yeah, guys, I've taught people to scalp in their first week of the Forex markets and they're profitable within just a few weeks. Right. And yes, it does happen. Because if you have the right education, yes, you can do that. But if you're getting in the game, you haven't got a close mentor and you're, maybe doing a course or something like that, I do recommend day trading. But essentially, just to circle back to your point, you have to eventually find a style that satisfies you mentally. Because if you can't be satisfied mentally with what you're doing, you're going to rush trades, you're going to revenge trade, you're going to do all the wrong things that the big P of trading comes into, which is psychology, right? If you can't be psychologically sound with the style and capacity in which you're trading, you will make mistakes. Does that answer the question, do you think,
Yeah,
Nicholas?
that's good. So, okay, we don't make broker recommendations because they vary. Like IC Markets is one of the best, but they're not available to the United States. Black Bull is
Yeah.
one of the best. They're not available to the United States. So you kind of have to do your own due diligence there. And the company has already said that they won't recommend brokers for that reason. So that's the one thing that you have to kind of do your own due diligence and read
There's
some.
plenty of review sites though,
Yeah,
right?
exactly. Review sites. Let's see, when you're a beginner and doing the copy and paste signals, say that the pair that you chose to master is GJ, but the signals aren't being called for GJ. Do you take some other and do you just copy and paste something else, or do you stick to the pairs that you started with?
Here's the thing, right? If you're going to be taking signals, the point of taking a signal is to take advice. You're, it's not even advice. It's you're trying to replicate the success of someone that is trading this. So if you're taking Domo's trades from Epic, if Domo's trading account is very positive every week and he's giving you some of his signals, then you're trying to replicate his success on your account and therefore in your bank, right? So I actually have different views to quite a lot of people on this. Okay. So be prepared to hear something different here. Some people say if you're looking to take a signal, actually have a look at the chart and try and make sense of it and all this kind of stuff. And I am actually going to tell you I'm a little bit against that theory because you're a first year trader and you're trying to become profitable. Why would you then try and question a profitable trader's results? It just doesn't make sense because you can't look on the chart now and understand the style that the trader's possibly trying to trade because you can't understand the confluences he might be trying to use because he might be a 5-year advanced trader trading indices and you've just got into the game, you're just trying to figure out what a pip is. So if you're trying to have a signal person success on your chart, just let their success replicate on your chart. Just copy what they're doing and just, yeah, sure, go onto the chart and analyze if you want to, but to help your learning. But I wouldn't let that impact your decision making on if you should take that signal or not. If you're looking at a signals channel and on average they make 1,000 pips per month, and you want to have a profitable trading account, let that signals channel just be your trading account. Let that figure it out, right? Let that success roll onto your trading account. If you're looking for all those TPs to get smashed, yeah, let all those TPs get smashed on your account. Okay. If you're looking for 1,000 pips, let those 1,000 pips be on your account if you're copying the signals, right? Don't try and like reinvent the wheel. If it's a profitable signals chat, just let it be profitable on your account. It's that simple. Your learning should be separate, in my opinion. I want you to learn with clarity. I want you to go on the chart and actually learn and take demo trades on a separate account to your signals, right? Let your signal account be there to make you money, sure. And let a demo account be there to serve you actually being independent and make sense of it. If you're on the chart right now trying to figure out why GBP, JPY is going up and you're trading using your own knowledge, you're going to look at the chart with clarity. If Doma gives you a signal to buy US 30, right, or any pair, if a signal provider gives you a signal to buy GJ, and you go on the chart because someone's advised you to go and try and work it out why they're taking it and then take it or do not take it, you're going to be so confused. Why would you do that? It doesn't make sense. Just let them deal with the success and you deal with a separate account where you can have clarity over what you're seeing. So that's my opinion.
Okay, great. So before I get to the last question from Cassie, well, you're going to love her question. So I have a lady on my team. Her name's Rose. And when Rose started, she just wanted to recruit. She had no interest in Forex trading. Then she started getting into it. She liked it more. And within 2 weeks of actually starting to learn Forex, she's now, doing $1,000 days. And somebody asked her, it's like, how was she able to do that? She said, when I took a trade signal, I didn't just take a trade signal. Whether it won or lost, I went back and analyzed why did it win or lose. And that's the thing, because you're getting signals from professional traders. They're basically giving you a foundation to go study. And, if you study that, you can reverse engineer a lot of stuff. So let me just look in this chat. Let's see. Binary options, you don't recommend that for beginners, right? Or
I mean, I started with binary options as a beginner. I wasn't good at it because I didn't know what I was doing. But if you've got solid, so here's the point: if you've got solid education, you can do anything. Some people said this the other day. They said, "Oh, don't get into binary signals if you're a beginner because it's too fast." To me, it doesn't make any sense because there's different expiry times. 60 seconds is fast, but 3 days isn't fast. That makes no sense to me. Binary options isn't fast. It's how fast you make it. Scalping on the 1 minute can be seconds, right? Swing trading on the H4 can be weeks, right? You can swing trade on binary options, right? You can set a 1 week expiry time. That's not fast. So that's bad advice that some people gave, saying binary options is fast. It's not fast. It's as fast as you make it.
Yeah, so I my personal thing was, until you master Forex and go through Epic University and stuff, don't worry about binary. I mean, you could join the binary and chill sessions and just kind of check out what it's about, but don't get overwhelmed by it. I mean, that's there as an added benefit. So
You need to learn how to trade Forex to be able to trade binary if you're trading Forex pairs. It's as simple as that. But you might find you're actually very good at binary, but then you suck at Forex. And there's nothing wrong with trading binary in the early days as long as you have education to do so. I know guys that traded binary from day one and never touched Forex and have never diverted. So you can do either, guys, honestly, in my opinion.
Okay, so
but you need to learn Forex as a foundation. Here's
your last question from Cassie Lynn. How long did it take you to earn your first 6 figures in Forex in profits?
It took me a few years to get to that point. It took me a good few years to get to that point. I don't think as a beginner you should be trying to focus too much on making money, as weird as that's going to sound. It's more, you need to focus on the skill set. You need to focus on becoming skilled, because that is what makes you profitable, is being skilled. Okay. And understanding and controlling your mind. So you have to focus. It's hard because you get into Forex or trading to try and earn money, but you have to actually, and this is where amends comes into it. You have to separate your mind from the money to actually become skilled. I train people and have done for years, and they come to me and they say, Aaron, I need to make as much money as possible, so I need your help. I'm like, okay, firstly, you have to change that idea, okay? Because you're not going to make money from day one, okay? And you're not going to make a lot of it from day one, okay? It's a skill that can make you a lot of money in the long run, but initially you're going to have to become skilled, and initially you're going to have to be on demo, and then eventually you're going to have to go into a very small, non-emotional sized account balance and replicate the same success you've had on demo. So there's a process to it, and there's a learning curve, and you have to be, this is the key, respectful to the power of the markets. And trust me, these guys that say, these guys with the naivety, like I did in my early days, of I'm going to get into trading and make $1 million in my first month. You're naive. It's not going to happen, right? Very unlikely to happen. Never say never, but it's very unlikely. And if you don't understand that you need to respect this market, guys, was it $3 trillion a day? You have to respect it, right? What have you got? $30 in the bank, maybe. It's you're not the market, right? You're not in that league unless you've got $3 trillion in your bank to actually invest every day. You're not the market, right? So respect it. The market isn't Donald Trump. The market, the market isn't even the Queen of England. The market's way bigger than that, right? So respect that you're this tiny, tiny bit of plankton, right? And only at that point, when you understand that, you can then give the market the proper respect it needs to become profitable.
To answer, D, I don't know. I don't think Aaron was saying to reverse engineer. I was saying like what Rose was doing is she would go back and look at that signal and kind of simulate it. What went right, what went wrong. And because the thing is, our educators and coaches, they're only human too. I mean, they're not going to get every trade right. I mean, if it was that easy, then like, I mean, Aaron, you probably hit what, 99% of your trades? No, well, what's the number?
I wish, mate.
Yeah.
Yeah, but it's not possible. It's not. Guys, find me a trader that wins 100% of their trades. I'll give them a lot of money to find out how.
There you go. All right, so that's a wrap. Last question, Aaron. When did you feel in your journey that I could do this full time? That this is my life. This is my career.
After a couple of years, I felt that way, but I've trained people that have had it a lot quicker. Okay, I've trained people that have had it a lot quicker because they had the right education. Everyone's journey is going to be different. Okay, if you surround yourself with the best and the right people, it can be a lot faster than it was for me, for instance. But it's how you spend your time.
Cool. Well, thank you very much, Aaron. We really appreciate your time. We went about an hour and a half, but the first half an hour was your story, so we stayed an hour after that. So
Sure.
next time we'll keep it quicker. But I hope you guys all enjoy this. Please drop some fire in the chat for Aaron. And like he said, it doesn't matter how much money people have. The Forex market's so much bigger. There's 62 people on this call right now. If we all made $1 million next year, it wouldn't even dent the Forex market. They wouldn't even feel
For
it.
real.
That's how
For
big the
real.
market is. Cool. Well, thank you very much, Aaron. I really appreciate it. I'll try to have the recording up later tonight for the people that didn't catch it, and we will talk to you next time. Thank you very much.
Awesome, man. Thank you so much. Thanks, Nicholas, and thank you everyone here.
All right, take care.
See you soon, guys.